What is up, you guys? Nick here. Happy Sunday. In this video, I want to talk about Tesla's recent moves and how this may impact investors leading into next week's trading week. As many, if not all of you know, Tesla will be included into the S&P 500 Index on December 21st, just over 1 week away. Tesla has continuously been the buzzword on Wall Street and the markets for the better part of this year, with over 750% valuation gain in the last year to date. With the recent $5 billion capital raise stock offering, new releases, and inclusion into the S&P 500, I don't know if this company could hit the headlines anymore, and I think that's exactly what Elon Musk wants for this company. Say what you want about the guy, but he fundamentally knows and understands how to create anticipation and buzz around his company. So moving into next week and beyond, should you purchase Tesla shares before the inclusion into the S&P 500? Or should you wait for some of this anticipation and hype to die down first? We have a ton to get to in this video. Get yourself some coffee, sit back, relax.
But first, Webull has increased their promo. They are now offering 4 free stocks worth up to $3,700. When you 1. Sign up, 2. Open an account, and 3. Deposit in at least $100 using the link in my description. They are a 0% trading platform with some of the best analytics in the game. I use this app every single day, guys. It's really awesome.
If you haven't already, make sure to hit that subscribe button. I'd really appreciate it. I do a ton of videos like this covering EV, tech, IPOs, innovative disruptor companies. You don't want to miss any of my future updates or picks. Smash the like button while you're down there. I would really appreciate it. Really helps out the video. Anyways, without further ado, let's get right into it. All right, so last week, Tesla announced it would be occasionally selling $5 billion in stock at market prices from time to time. This is Tesla's third capital raise just in this calendar year. So for you investors investing in small startup electric vehicle companies, NIO, Li Auto, Xpeng, take a deep breath. Because the top dog, the OG, the one that started it all, Tesla, if they are performing this many capital raises this far into their lifespan, you should expect the same for these new startup companies. Tesla had previously raised $2 billion in February and $5 billion in September, with over $14 billion in cash and cash equivalents, and will have over $20 billion by the end of December this year. This is craziness. Tesla is so easily able to sell shares. There's virtually no ceiling anymore for what investors will pay for a Tesla share. What's crazy about this whole prospect is that they don't even really need this money right now whatsoever. It's just money added into their piggy bank. Elon Musk is essentially racking up so much cash to be able to do exactly what he wants when he wants to. With these moves is coming a horde of young investors that are hanging on every single one of his words and just throwing their cash at him. This capital raise is a huge flex, for lack of a better term, on Tesla's part. They could use this cash for further autonomous driving technology, Cybertruck facilities, further battery development, their ongoing gigafactory expansions. All these feats require enormous sums of cash, and Tesla is filling up their pockets with this cash ready to explode. There are virtually endless options for Tesla to use this cash for. This will all tie in with the end of the video, so hold on to that thought. Now, with the Tesla hype that has occurred over the past few months, there are so many new investors that have just gotten into this company. I'm not sure these new investors fully grasp how Tesla's business model works, where they are planning on going in the future. I don't know if they've looked at their business operations or their balance sheet for that matter. I think they heard the saying, stocks only go up. And you know what? For Tesla this year, it kind of has. Now, as the run-up to Tesla being included in the S&P 500 Index, we run into a very important concept here. As many of you know, there are many index funds, whether that be mutual funds or exchange-traded funds, that use the S&P 500 Index as their benchmark, essentially mimicking the exact same companies that are in the S&P 500 in their own fund with their exact same proportionate weightings. With Tesla now being included into the S&P 500, this means that hundreds, if not thousands, of funds tracking the S&P 500 will now have to purchase Tesla shares. These funds using the S&P will have to do this prior to or on December 21st. This is going to trigger a mass amount of shares being bought and sold on and leading up to December 21st. This will be enormous for the stock market as a whole. It's important to note, there has never been a company with a market cap as large as Tesla's is currently right now that has been introduced into the S&P 500. Never. Knowing that there's likely a run-up into the inclusion date, many hedge funds, swing traders, and short-term investors have been buying bulk loads of Tesla shares only to probably sell these shares upon actual inclusion. They will likely sell them to large index funds who are tracking the S&P, who are essentially forced to purchase Tesla shares. There are going to be astronomical quantities of Tesla shares flying around the airwaves on December 21st. With that comes volatility. Now, we as investors can't predict the future. We don't know what's going to happen. It might go up, it might go down, who knows? Sideways, could do anything. But there is one thing for sure that we do know, and that is there will be extreme amounts of shares bought and sold, and a lot of volatility. Looking at historical data from companies entering the S&P 500 index, we see a pattern play out again and again. And this pattern is a steady surge in share price leading up to the date itself. The date hits, there is a ton of volume and a lot of volatility. A couple days, a week passes, a correction typically occurs, and the company's share price kind of follows its original trajectory line. Now, this doesn't happen every time, of course. It's just a pattern. But I do personally think we will see a similar pattern play out with Tesla next week. And here's why. Tesla shares have already had an historic run-up this year. They're up over 750%. They're at all-time new highs, and they're entering the S&P 500 all within 1 week. It's because of this that I do think if a correction begins to take place, many investors will happily get out while they can with their nice profits that they have accumulated throughout the course of the year. An absolute colossal amount of profit taking may occur and shares could potentially plummet. A lot of investors have made a lot of money on Tesla shares this year and may be looking to get out high to buy back in low. Compounded on this, I think a lot of new investors who have recently become Tesla shareholders and young investors who have never seen a real major correction may absolutely run for the doors upon a sinking share price. They may sell their shares out of fear and panic and emotion, not really understanding the business fundamentals of a company and not really understanding long-term investing. Keep in mind, not me, nor anyone on the internet knows what's going to happen to the share price next week. This is a hypothetical situation. But if this does happen, and many analysts do think this is quite likely to happen, this could open up a perfect buying opportunity for long-term investors. And this brings me back to the first point I was making. Tesla has long-term goals in mind. Plain and simple. Tesla has over $20 billion in cash and cash equivalents on hand. Plain and simple. Tesla is expanding globally, dominating virtually everywhere in the world. Plain and simple. They are building additional gigafactories across the world. They are lowering the cost of batteries. They are attempting to release a $20,000 vehicle. They continue to innovate and expand their autonomous driving software and technology. And remember, their pockets are extremely deep. All of this is to say that when hyper-focused on short-term share price fluctuations, setting capital gain tax aside, you might get lucky and sell high to buy back low again. But then again, you may not. And you as an investor need to come to the conclusion of whether or not that risk to reward is worth it. Short-term swing trading at the end of the day, for me personally, is gambling. It's not investing. I personally am looking 3, 5, 10, 20 years down the line. I'm not too concerned with these short-term movements in the share price. So I, for one, am not selling any of my shares leading up to the S&P 500 inclusion, or after that for any matter. This company is so extremely well positioned to dominate the coming landscape. They practically have a monopoly on the entire industry at this point, and this does not look like it's going to end anytime soon. The stock is so volatile, and I for one am not willing to risk my investment to essentially hit the slot machines on the stock market. This company is so well positioned for the coming landscape. It's for these reasons that I am simply dollar cost averaging my way through this stock, as I really believe in their core fundamentals, their direction, they have huge pockets, and their continuous innovative disruption. If the stock does plummet following the S&P 500 inclusion, I personally will indeed be buying a bulk amount of shares as I believe in the long-term potential of this company. I think it's good practice to zoom out on a company and focus on where they could be 5, 10, 20 years down the line and not get too hyper-focused on the short-term volatility. Anyways, everyone, that's just my 2 cents about it. I'm not a financial advisor. You're gonna have to come to your own conclusions, gain as much research about the company as you possibly can. It's good practice. Hit that subscribe button if you haven't already. I would really appreciate it. Smash the like button for the YouTube algorithm. Don't forget about the Webull promo. 4 free stocks worth up to $3,700 when you sign up, open an account, and deposit in at least $100 using the link in my description. Anyways, everyone, thanks so much for watching. I really do appreciate it. Thank you so much for the continued support. Hit the subscribe button if you haven't already. Let me know in the comments what you're doing. Are you buying, selling, holding? Let's have a discussion. Anyways, I will see you all in the next video. Cheers.